Andrew, welcome, man.
Thanks for having me. Good to
Yeah,
be
dude.
here.
We were joking pre-stream. They got you on the media tour right now, man.
Yeah, I'm doing one or two podcasts a day.
I
Gonna
love
be
it.
like that for a while.
It's funny too because you're a little bit of like a mythical guest. I think I reached out to you maybe during Trump coin era in January 25, and I was trying to get you to come on the stream, and you were, I don't really do them. I don't know, maybe one day. And so that maybe one day has arrived, which is awesome. So I appreciate you coming on. I think a good place to start before we get into all the robot stuff, which we're obviously going to cover, is I don't know. I want to get like a little bit of Andrew Kang lore and set the stage for you as well as to kind of who you're talking to. And I'm very crypto native. I basically got introduced to markets through NFTs, through crypto, and a lot of the audience that watches the stream, watches this podcast is the same way. And we've sort of made this transition where after 1010 the crypto market has definitely seen better days, and we're sort of just like chasing volatility and trying to figure out what else can we trade. And the word I would use to describe it is we're forced to trade metals and forced to talk about the Iran war and look at oil. And obviously over the last year, equities markets have been in just the up only parabolic price action on semis in the AI trade. And again, the word I would use is forced. Like it really took Hyperliquid and HIP3 to list equities and to list these stocks and to watch these charts go vertical for us to be like, all right, finally, now's the time. I'm not going to pay attention to crypto. We're going to pay attention to crypto. We're also going to trade these stocks. And I mean, I've watched you over really like the last year as one of the most prominent crypto names find a new asset class, an emerging asset class that's definitely not consensus then. It's definitely still not now in robotics, and just go all in. Obviously, now you're doing what you're doing with RoboStrategy. And so I'm just curious, like, what was the moment like where you realized this thing is going to be huge? And then how do you mentally will yourself to commit all fully, turn your, maybe not turn your back, but look a different direction and sort of get tunnel vision on a new asset, if you will?
Yeah. So the first time I got kind of pilled on robotics was, I would say, late 2023, 2024. A friend in Silicon Valley, he told me, "Hey, look at this company. It's pretty cool. Company was called Figure AI, and they were building humanoid robots. And it seemed pretty like out there, right? Because most of Silicon Valley at the time was investing in software and starting to do more AI, but nothing like that. People weren't talking about anything like that before. And doing a little bit of research and kind of watching Brett's story, it became clear that one, this is the guy and the team to do it, and then two, hey, robots are actually going to be a thing now. We've always kind of dreamed about them as some element of sci-fi.
Mhm.
We always thought like, hey, this is what the future is going to look like. But then we grew up and the future wasn't like that. But hey, look, the future is now coming, and we're actually going to have robots that are like, the Jets in the Jetsons, or name your movie, that can act in the real world in the same way that humans do, right? They're not just doing one task over and over like traditional, traditionally programmed robot, but they can learn and they can see the world and they can act in the world like humans. And that opens just a massive amount of possibilities. That is like, I think, as transformative as the invention of the smartphone or even the internet or AI, right? It's a huge
Yeah.
technological jump. And when I understood that, right, that this is going to happen, because the bottleneck for robots working, it wasn't the mechanical design. That's really hard, but it was solvable with enough work. It was the intelligence of the robot. And ChatGPT came out, and it wasn't perfect, but it was obvious to those that could look at the trajectory to believe that we're going to have really, really strong intelligence in the near future, and that would also apply to physical intelligence for robots as well. And so that making that connection was pretty visceral. And I reached out to a bunch of friends that in the venture industry, because that was not my area of expertise,
Yeah.
robotics. And so I don't really want to invest where I don't feel like I have any edge or understanding. And I asked all of them, should I invest in this company? Like this thesis makes sense. And they all told me no. And when I asked them why, it was really just because people pattern match. And they were saying, hey, the robotics industry hasn't previously produced venture scale outcomes.
Yeah.
And robots have been really hard to work with, and it's expensive to develop these things. And it's like, it reminded me of crypto in 2014, 2015. I wasn't even, in at that time because I was still young. I didn't really have any money. I was in college, but it was at that point where I think it was very clear that we're at this inflection point where things were developing like this for a very long time, right? Just like small incremental gains in progress. And now the incremental gains of progress would look very vertical, like what happened with AI. And the more I looked into it, I just thought I was missing something at first because I had access not even directly. It was through, SPVs, and I saw more and more SPVs the more I looked. And so I thought, man, I'm probably getting ripped off here because they can't fundraise and I'm getting access through SPVs. I must be missing something. And the more I kind of like dug into it, the more I just trying to figure out what am I missing by understanding the competitors, by understanding the competitive dynamics in the industry, by talking to the other investors that were in the round, getting reference checks on the team, and doing the full due diligence process. I realized that no, I wasn't missing anything. The rest of the venture capital landscape was missing something. And just like in crypto in 2014, 2015, the industry was really misunderstood. People thought Bitcoin was a scam. And that's the best place and the best time to invest. And to also establish yourself as a business or to build whatever you want to build in the space. Timing is important as well because you can build advantages over time. And I thought, look, if nobody else is building an investment firm in robotics in this space is going to require billions of dollars of capital, actually tens of billions of dollars of capital to survive, why not be the one to do it and to establish something that will be the dominant leader in the future? And so why else that was exciting was because it was hard doing that due diligence because robotics is such a complex topic. It is so multidisciplinary, right? Like you have to understand not just AI, but how does it apply to robotics? And there's a reason why robot learning is a little bit behind, like, these robot foundation models are a little bit behind, the LLM is because it's more complex. There are more things about the world these models need to understand than LLMs do. And, you have everything involved with like mechanical design, hardware engineering and manufacturing and, understand like the importance of all these elements and like how to create like a framework to evaluate these companies that didn't exist. Like that was exciting to me. And I think that's how I initially had an edge in crypto early on was because there also was an established framework
Yes.
to evaluate these. And I was able to create one for myself that I thought made a lot of sense. And it was an exciting challenge to do that in robotics as well and to build the expertise. And when there's a huge gap in understanding and a difficulty to build that understanding, then there's going to be a lot of future alpha. You can set yourself apart from competitors on the investment side even more. Look, there's going to be a lot of losers in robotics. I believe the industry is going to be massive. But as with all startups, most of them fail.
Yeah.
And there's going to be a very big dispersion in who's winning on the investment side, like what returns people are generating. Just like in AI, look, there are a bunch of companies that came up over the last 3 years, 4 years after ChatGPT came out. But unless you were investing in the big winners, if you were investing in some of the maybe model wrapper companies or some of the fast follow companies try to build their own foundation models, like you might have gotten wiped while the top companies went
Yeah.
30x. And so it's like
Yeah.
making the right decisions really matters. But there's a lot of work that goes into making the right decisions. You need a team. It can't be yourself. You need robotics experts, right? And so that's kind of like what we went out to recruit and develop is kind of a real investment platform that has expertise in robotics from previous founders and operators, has a research team, has a policy team, etc. So this is a whole new challenge, which I found pretty exciting.
Can you shine a little bit of light onto how you think about writing, like developing an investment thesis in doing DD on one of these emerging industries? Because you've done it twice, right? You've done it with robotics, obviously, right now, but then you also did it with crypto really early. And as you were talking, I pulled this up because you wrote this article. I forgot about this, February 8th, The Exponential Horizon. And it was about how you think about and foresee the future of the exponential in a market. Obviously, it was related to robotics, but you've done it twice. And I think this is a very difficult thing for people and traders and investors to think through for an emerging market is how you value the exponential and how crazy things can get.
Yeah, so I think it's really important to understand that technology development is not linear. It can look linear at some phases, right? Because if, for example, like the period of, I don't know, 2010 to now, right? Like social media has gotten a lot better, like smartphones have gotten incrementally like better, but it's like nothing crazy has changed. And there can be these like inflection points where, oh wow, the curve looks like this, right? And now it looks like this. And some of those inventions, not all of them, they can be very reflexive, right? They can have these second order and third order effects that are super important to what that curve looks like. Because I think it's obvious, right? Like if I can automate AI research and AI can do that itself, then I can speed it up maybe 2x, 5x, 10x. I can do experiments for more hours in the day. I can have more people doing experiments or more agents doing experiments. And that really kind of compounds. And like cycle times, right? Iteration times between experiments can drop from 90 days to 45 days. And then because the AI is better, now I can do research even faster and faster. And so that is not just, I think, going to apply to AI because AI has ramifications on every single field in the world. And it will accelerate development in every single field in the world. And it is so hard for the human mind to kind of understand some of these non-linearities. And the market is really, it's difficult to price that in because a lot of like traditional, cash flow models like DCFs or whatever, they just assume 8%, 20% year-over-year growth for the rest of your life. And it's just like a stable line. And it like breaks your model if you have something that's like 100%, 200%, 300%. And I think it's like if you make those assumptions that it's going to be even just 100% year over year for a few years, like the the output in terms of price could look like 10x different or something like. And that's what you're seeing with some of these companies. Why they're going so parabolic is because we have to reshape our whole thought process around how to value these companies and what their growth could look like in the future. And so like if you take that understanding of the world, why are you trading? Like why are you operating on a short-term time horizon? Why are you even thinking about macro? I have so many people still message me about, oh, I'm worried about the macro. Who cares? Like I understand risk management. Risk management is important, but if you really believe in a company, if the market doesn't re-rate them for maybe another year because the market was bad, or if this is a public stock, it goes down 30%, 50%. But if you believe that's just temporary, then you should just be holding and you should just be looking to optimize your portfolio and finding the best companies in the world because within a very short amount of time, it's going to outgrow whatever correction there is because of how fast things are moving now. If you look at some of the best investors in the world or some of the most prominent ones, Peter Thiel, right, is like a really famous name. Chamath's a well-known name. They were both in Facebook really early, and they sold all their position at the IPO when the company went public. And now, how much more is the company worth when they went public? They've done a lot of really great investments outside of that, but they might have just outperformed. I think they would have outperformed just holding their Facebook stock instead of like doing 100 other different things. And I think like as humans, like we have the itch to like find the next best thing and to, take profit when something goes up a lot, but underappreciate the fact that, man, like the universe is almost infinite if you're building like a really great company. Like people underestimate the TAM for some of these companies. So I think that is something that we should all understand as investors. And I've made that mistake in the past as well. Even though like most of my big wins were from, you know, investing and then holding something until the thesis kind of played out over the course of years. And then, I've done more short-term oriented trading and investing as well. And it's always, I think, the longer term stuff that has outperformed. And that I think that's the case for a lot of people. It's probably like more than half of people, or maybe 90% of people would tell you, I just wish I held Bitcoin from 2020 or 2019 and did nothing else, right? Or I should have just held Apple or Nvidia or Google or Amazon.
Crypto Twitter, Fin Twitter, whatever will try to beg you and force you to believe that you have to care about like what Jay Powell or Warsh is going to say at the next Fed meeting and like what interest rates are and what this macro thing or this closure of the Strait of Hormuz, whatever it is. And I love that you said it because I feel like so many great minds have been one shot by the idea of day trading or low time frame perps trading. That was a really sick take. I want to talk about talent for a second and like the general outlook of young people in tech. And I think in a lot of ways, I heard you talking about this on the Pomp podcast, which is very good, by the way. And you were talking, I'm going to miscombobulate some of your words, but you were talking about these robotics companies and you were saying that it takes super specialized, giga talented people to work on solving these problems. And there's like 100 of them in the world. And they all have to be under the same roof and within the same company and firing on all cylinders in order to make this thing work. And I just want to ask you about talent. Like, where is all of the young talent in the world going right now? And how does it compare to what the AI labs are getting, to what the robotics companies are getting, to what the HFTs are getting, to what general startups are getting? Like, where are they flowing? Who's leading in like top talent? And how is it sort of broken up?
I think the major change that has happened is that there's been more talent flowing from, a lot of the fields that you just mentioned, I guess like traditional finance and crypto or like whatever was sexy back in the day, to building in the world of atoms that we previously thought, hey, things were really difficult and there's no more technological innovation to be had. And people are coming to understanding that, wow, these systems are really old. There's a lot of improvement to be made. And these are viable businesses as well. And they're really exciting to think about. And so I'll give you one example that I just heard about the other day. A friend, he was running a prop fund, nine-figure prop fund, majority his own capital. I think he's in his 20s as well. He's like really young, really talented guy. And a friend at a physical AI lab reached out to me. He's like, hey, do you know this guy? What do you think about him? He just applied to be an intern. And this guy's like the founder of the trading firm. Like, he could be well retired. And there's a lot of interest in, I think, what's going on because the smart people understand that, hey, look, we're going to have real robots. And what's more exciting than that? And so that is also a factor that is going to accelerate the development because there's just so much more smart people going in this space. Maybe there's like a lag for them to kind of get up to speed. But that is one element. And then there's the other element of like, well, now there's more infrastructure being developed to make robotics development easier. The supply chains are getting better. There's more development kits being released, developer tools being released, and better education that's out there. Claude is really great at helping you understand and learn about new things. And so all these kind of things build on top of each other to, drive forward more industry growth.
That's a crazy. Did he get the job as the intern?
I'm catching up with him tomorrow.
Okay.
So we'll see. I gave him a good reference.
Yeah, good luck to him. That's a fucking crazy story. And talking about the future of robotics, one of the things that I always think about and talk about on stream is this idea of moving the goalpost. It's happened a lot with LLMs and what they're able to do on especially the coding side. And it's definitely happened in robotics, which is a field I don't know as much about. But what I do know is that I first moved to LA like 2.5, 3 years ago. And when I got to LA and I saw a Waymo for the first time, I genuinely could not believe what I was looking at. That there was a car driving down the street that does not have a driver and there's people in the back seat. And then you turn your head to the left and there's 3 more of them. And then you realize, oh, not only are there cars driving without a driver, but it's like the most popular car on the road in Los Angeles, California is a Waymo. And when my parents came to visit me for the first time and they got out of the airport at LAX and there was a Waymo next to us picking us up at the airport, I mean, every person's first reaction, they stop, they pull their phone out and they take a picture. And I think this is one of the things that has been wild to observe with LLMs as well is like, oh, they'll never be able to code. And then it's like, oh, they'll never be able to write like usable code. And then, oh, they'll never be better than like a mid-tier software engineer. And then you keep moving goalposts. And then before you know it, it's like software engineers are coming out and saying, all right, 90% of my code is all AI generated. And then in the case of robotics, it's always like, when is it going to happen? When is it going to happen? When is it going to happen? But then you see something like Waymo, and then you see the demo that Figure AI just pulled off for what, 20 consecutive days or something. We were watching it on the stream, and you start to think, wow, it's unbelievable how fast the technology has progressed. And it feels like humans are stuck in this perpetual move the goalposts back further so it doesn't seem as real.
Yeah, it was really surprising to me the last few years having these conversations with, experts, quote unquote, or, software engineers that really didn't believe that these tools would get better. People are just kind of stuck in terms of like, what can they do now
Yeah.
without evaluating what the future could look like. I think it maybe comes from like a sense of, we need to feel special as humans. So that was yeah, that was crazy to see that people, weren't appreciating that things could get better, but they are, and they're getting better really fast.
Can you talk about that Figure live stream? Was that, I don't know, what did you think watching? I know you're obviously a huge investor. Some Figure is in RoboStrategy. You've talked about this investment a lot. So less about the investment and more about what they just put out. That live stream, I said to you off camera when we were in the back room that it felt like the ChatGPT moment for robotics, where it was like, whoa, this thing is real. And it's not some like pre-recorded, synchronized demonstration that somebody posted in some edited cinematic video. It was like, no, it was a live stream, and it was a 20-day plus live stream. And the thing really, we were watching it on stream, and the chat, I couldn't really believe what I was watching. I was pretty blown away by whether it's a simple task or not, how consistent it was, I think is the word I would use.
Yeah, I think it was like one of those moments where there's like a shift in like the global consciousness of like, what we believe, technology can do. And that had that for ChatGPT, and maybe this is close to something like that for robotics. Although it's not, I think we're not going to have a million robots in people's homes tomorrow, but there's definitely that perception shift. It was crazy over the past few years. Actually been a lot of doubt and criticism about Figure as a company from this Silicon Valley group that like didn't even believe that this company was real, and that they could develop real technology, and they thought it was all kind of a sham. And now I think like we're seeing that perception change where you're talking to the same people and they're like, oh, yeah, actually this is really exciting. How can I invest in this? What else are you looking at in robotics? And yeah, that live stream made it really real for people because they can see that there were, no tricks being played. It wasn't pre-recorded, and they took the best shots. This is like they got it down. And I think like that's a really great way for robotic companies to develop, to kind of like demonstrate their capabilities,
Yeah.
is to do stuff on live stream. So I think we're going to see more of that in the future as well.
Can I ask you what you did when you, like, if we're gonna declare this the ChatGPT moment or something adjacent, can I ask you what you did when you saw ChatGPT for the first time? Because I imagine there's a bunch of people, investors, aspiring traders, that just saw the Figure thing, and similarly to the excerpt you just gave with these VCs that were not that interested, are like, yeah, this is gonna be huge. How do I invest? Like, there's a lot of people that are probably feeling that angst right now as it relates to robotics. They just saw it for the first time and are trying to figure out like, what do I do? I'm curious what you did when you saw ChatGPT for the first time.
Yeah, I tried it out. I tested it around a little bit, but to be honest, I didn't really go hard on trying to figure out the AI investing landscape. Maybe my mind was occupied with other things, and I think at the same time, it felt pretty daunting to try to break in and understand this field. Um, when, I was kind of outside of that Silicon Valley world. And that's kind of like why I like robotics, was because there wasn't already kind of this cabal,
Yeah,
right?
yeah,
That had like
yeah,
kind of cornered these relationships and everything else. And, if you put yourself out there and you showed, hey, look, I've really done my research and I know my stuff, then like you can, start building these relationships with these founders and, supporting them. And then, building your own brand up as an investor that people would want to have on their cap table.
I like that. So, what does the rate of progression look like from where we are right now with robotics? Like, if we sort of hit this holy shit moment, where do things go from here? Like, how do these robots get better, get smarter? How do they grow? Like, what is the rate of change going to look like from this moment forward in the future? How can you think about that?
So I think we're at the ChatGPT 3 level of robotics already. And it might be hard to understand that because I think ChatGPT or like GPT-3, people could use it immediately and it was like useful for some applications. Although, for a minimal amount of applications, I would say, even though it was wrong half the time. And that's kind of like where we're at with like these robot foundation models is that like they're pretty good at like, a decent amount of things now, but they're not doing it right half the time.
Yeah.
And so if I need a robot that's actually useful, it needs to be right all the time. So my bar, right, is a lot higher. And to put it into my actual workflow, it just needs to have like zero failures, or else it's not as useful. Imagine if your like coffee machine was breaking down every 2 days, or it made it wrong half the time. So we need a really high level of reliability for these to kind of like penetrate everyday life and to be deployed into different places. And so that I would maybe consider like GPT-5 level of intelligence, where now we can start using like directly integrating AI into workflows, right? Without a human in the loop to double check the work. Not everything, but for some things we can. And why do I think we're going to get there in a year? Well, the gap between 3 and 5 was 2 years. But as we mentioned earlier, technology makes future development, technology development faster. And so because of all the innovations that we've had, people can do robotics research is like very time consuming. If I want the best way to do research is to have a robot model, like on an actual robot, not in simulation, and having it do a task over and over again, maybe 100 times, maybe 1,000 times. And if I have like, for example, I need to put this water bottle into a basket and I finish the task. Okay, now a human needs to reset that and put it back in the same place. And maybe I also need a human to kind of watch every experiment and like record, did this actually go well or did it actually not go well? And in what case, like how could it have done better? And so there's all this human in the loop, and the human in the loop is starting to be removed from this process. And we also have like all of these different research and development techniques for AI models that have just gotten better and better. And so people think about, okay, 3 to 5 was just scale. No, it wasn't just scaling up compute. It was like we understand, how else better to structure the pre-training mix, how to better do, data annotation, what we need in RLHF, right? We added RLHF. We also added mid-training as well. Like, how do we have these models think? And in what ways should they think? So we have basically like done that work in understanding how to make these models better. And a lot of those can be now applied to physical AI models. So we don't need to recreate that whole kind of like experimental and research phase because a lot of this research is open source. There's talent that moves between company and company. And so I think we're going to have faster, smarter robots get a lot smarter faster than people might think.
So when you talk about like robots integrating into your daily life, can you just like paint an optimistic picture for what the world looks like if robotics gets as good as you think it can get and if it scales as fast as you think it can scale? What does it like, yeah, what does like the optimistic world look like on a day-to-day basis? Like 5 years from now, 10 years from now, like what is your timeline on that?
I think the bottleneck is going to be hardware. I think we're going to get, I wouldn't say robots for the home ready in, 6 months to a year, but maybe we'll have that in 2 years. And what that means is the gap from, the demand from robots gaps up, right? There's like a huge jump. But like we can't automatically produce billions of robots like we can spin up, instances of a chat bot instantly. And so that'll take some time to kind of just scale the hardware. But in terms of like, you seeing robots more and more, like humanoid robots in everyday life, I'd give it like 3 to 4 years. I think people that are going to be willing to pay more money are going to have them a lot sooner. But it's going to increase really fast year over year. I think it's going to be like 10x increase year over year. So you're going to get that'll take you to, the hundreds of millions and billions of robots pretty quickly, maybe in the early 2030s or so. But that, like, what does that mean for everyday life? That means, hey, look, everyone can maybe have their own personal assistant. They'll do their shopping for you.
Yeah.
They'll pick up your kids from school. They'll help you in ways like you wouldn't even think of. You don't even need to command them to, because they're just thinking about how can I make Threadguy's life better? That, your parents get older, you can have robots take care of your parents, make sure that they're well. You can have robots building your business for you. Maybe I want to build this hotel resort in, I don't know, Montana. Like, we'll have robots do it. And like, I think this is just like thinking about like everyday life now, but like, how is the world going to change? Well, I think there's this huge interest in space exploration. And, we're going to have some humans go to Mars or other planets, but it's going to be difficult out there for the beginning, right? It's not going to be very
Yeah.
hospitable. And so we're going to have robots that are going to
Yeah.
build the infrastructure first.
I heard you on, I think it was Palm's podcast, talking about, like, you were just like breaking down the market for the future of robotics. And I want to get your take on like the future economics of the industry, but specifically, like, where's the most money and in what vertical is the biggest opportunity? Like, is everyone's gonna have like a personal robot as like a personal assistant, and that's where there's gonna be like, billions and trillions of dollars generated? What verticals is there the most economic upside, and like how does the economics behind robotics sort of break down on the consumer side?
I think it's going to be, at least a robot per household. I don't know what the economic situation for each household is going to be, but if it's, very plentiful, then maybe we'll have a robot per person. Who wouldn't want their own personal helper or more than one? But it's going to be like a kind of like a iPhone or car situation where I don't want like a cheap one. I don't want a dinky one. I want a brand name one. And that's why I think it's important to invest in companies that have taste and style, because those are going to accrue a ton more value than the ones that don't. It's like how Apple has dominated the phone market, or, Tesla has dominated the car market. So I think the home is going to have one of the biggest upsides. Because of
For
that, it's
home.
like, like people are going to be willing to pay big margins to have something that, they can be proud to show when, their friends come over, when they're hanging out or whatever. But at the same time, there's going to be a huge upside in literally every industry. You think about Walmart, they make $700 billion per year in revenue, but their net income is something like $20 billion. Their operating income is around $30 billion. How much are they paying for physical labor? It's around $100 billion.
Yeah.
And so the biggest lever for growth for a lot of companies isn't trying to, put another Walmart up or grow top line by another 3%, because like, what are your margins on that even? It's by reducing their costs. I mean, you could multiply the value of a business by increasing their margins from 3% to 10% to 15%. And there's so many massive companies that actually you wouldn't consider them massive market. UPS or FedEx, for example, these companies make, I think, close to $100 billion of revenue, and they're trading for less than that just because their costs are so
Also
high
terrible.
and their
Yeah.
margins are so low. But that exists for so many different types of businesses, because physical labor is just a part of the everyday life. And I just want to like point out that I'm not advocating for people to be displaced. I think that you just have to be realistic and pragmatic about how technology is going to impact the world. You can't stop it. We've never been able to stop technology. And so we got to think about the right solutions for when technology gets a lot better, which I think is we got to provide UPI, we got to provide a safety net. I've never been a socialist. I've been actually like anti-socialism, but there is a case for it when there's not much of an alternative, when it breaks the
Yeah.
traditional system.
I have a Andrew Yang book, Hey Yang, where's my thousand
Yeah.
bucks in the background. One robot per home is crazy. That is a lot. That, and if you're very well off, but one per person. I had this written down for like a topic for later, but one robot per home. What do you think is going to be the general societal response to that? Right, like we're seeing the sort of Luddite, the modern Luddite movement generate some steam on if we protest these data centers and we get angry enough, they won't build them. And I guess it's relatively a small pocket, but it feels like it's a news story on my stream doc once a week. What is going to be the societal response to the push for one robot per home?
I mean, the push for it, it's just society's gonna want it. Like, who wouldn't want their own personal assistant? Like, there's so much menial stuff in your everyday life, doing your dishes, like doing
Facts.
laundry, taking out the trash. I mean, all of this really adds up, or like cleaning up the house. It could free up so much time for us to do better things with our lives. And yeah, I think people will be pretty accepting of that.
It sounds good. I like it.
Mhm.
When you look at picking winners in robotics, especially on the humanoids side, what what competitive advantages do these relatively smaller companies like a Figure and the ones below it have against the giants of a Tesla or a Google?
So Tesla is the only one building their own humanoid, and that's why I got so excited about investing in Figure and Electronic and some of the other companies. Is that, man, these big tech companies were asleep at the wheel. So, you know, they didn't have their own humanoid programs. Google at one point owned Boston Dynamics, and then they sold them. They also had this internal, everyday robots initiative, which was scrapped. And so they have a really competent, by the way, robot learning team, like robotics AI research team that, they've had some like talent loss recently, but you got to bet on Demis. So I'm bullish on them long term. But they're not building their own hardware. They're partnering with companies like Aptronic that are building the hardware.
Yes.
And so that'll look like something, like their Pixel, where um, maybe they're not designing all of the hardware, but maybe it's Google branded, and they'll provide the operating system for these robots. So that's what Google and NVIDIA are doing. They're building the intelligence, the operating system for these robots, not so much focus on commercializing hardware. Companies like Microsoft, Meta, and some of the other companies like Apple, for
Yeah.
example, they are now getting more interested in robotics. But you saw what happened with the Apple Car program. It's not in their DNA, and the talent pool is really, really small to develop like really good robot hardware. And so I don't see any competition from them. If anything, they've made acquisition offers to a lot of robotics companies. And some of them have gone through. I think Meta acquired ARI. They have some excellent researchers there. That was more on the AI, like robotics AI side of things. But yeah, I think they're gonna maybe start to try to pay more and more when they realize, look, I can't develop myself, and this is gonna be a really big market that I can't miss out on. So that's I think a really big tailwind for the industry is, the entrance of some of these players. Maybe it's not acquisition, maybe it's partnership, maybe they work on distribution, but they don't want to miss out. When it comes to Tesla, I would say Elon has a lot of stuff going on. He's like the best entrepreneur in the world, but his focus has definitely been spread across a lot of different things, right? SpaceX and Neuralink and XAI. And the Optimus program, I can't say that they're exactly number one right now. I can say that they're going to be a huge company in the future. Like Optimus is definitely going to be a big success, but there's room for a lot of different winners. It's not going to be
Wow.
winner take all. It's going to look like the automobile industry where you maybe have like 15, 20 big players, but then maybe, like you have a little bit more concentration of value with some of the top players. And, you have some excellent entrepreneurs out there that are, I wouldn't say Elon level, but maybe close to there that are putting their entire effort into just developing humanoids. And so, that can give you an advantage.
It's a sick take. One of the narratives in the stock market, like the terms in stocks over the last year that's been thrown around so much, is the concept of an AI bottleneck, right? And in many cases, we're going further and further and further out on the stack. What are the bottlenecks? What's holding back development of this technology? And I'm curious, like, how you think about the ecosystem for robotics bottlenecks. Like, is it a raw materials thing? Is it manufacturing capabilities? Is it actuators? Is it lubricants? Like, how do you think about like the stack, if you will, and the bottlenecks to rapid acceleration on the build out?
Yeah, there's quite a few bottlenecks. And what's funny is physical labor is also a bottleneck for AI,
Yeah.
right? Because you heard Jensen and Elon talk about it. The issue with building these data centers faster isn't some of the materials, it's the people that are doing the plumbing, the electricity work, putting everything together. There's just not enough people that know how to do these things or even want to do these things because they're, sometimes can be very manual and they can be hard work and yeah, it can be an exhausting job. And so, that's kind of like one of the solutions robotics is going to provide in alleviating that bottleneck. But in terms of like robotics bottlenecks itself, actuators are a big thing, right? Actuators are basically the motors that make the joints move for the robots, right? They power the robots in the real world. And the actuator, there are a bunch of them in an actual robot, and each of them could be in different shapes and sizes. And they make up around 30 to 50% of the bill of materials, the BOM cost of a robot. And that's very substantial. So, but where like actuators, where are they used today? They're, sometimes used in some of those like semiconductor, development machines. They're sometimes used in hospital robotics. So there hasn't been a need to produce billions of them. And especially of like the shapes and sizes and that they have the characteristics that a humanoid robot would need. And so that industry, that's part of the supply chain, has a lot of build out ahead of it. And there's a lot of investment going into building out that part of the supply chain in China specifically, actually. And they're actually making some really great progress there, which is why you're seeing some big companies basically sourcing their actuators from China, even Tesla, for example, I think that's been in the news. And there's a bunch of these parts of the robot, right? Like they're made of metal and they're made of materials that exist, but not in the form that needs to be like produced for a robot. The GPUs as well, right? Like the robots need onboard compute. You can't have a robot like lose connection to Wi-Fi or 5G and it just stops working. It needs to be on your robot. And so we have a GPU, right, like bottleneck already and that might be even more aggressive in the future because of the need to have them on robots. There's a lot, yeah.
The GPU bottleneck, the compute bottleneck is just never going to stop.
Mhm.
Another thing I was talking with the team while we were like preparing for this is we had this discussion of why are they humanoids? Like, why are they shaped like humans? And the answer is that, or at least our answer, is that the world is designed for humans, which is maybe a bottleneck within itself of the performance of a humanoid robot. How long is that? Like, how much longer is that going to be the case where the world as we know it is designed for humans rather than designed for the optimal way to build a humanoid robot that has, 7 hands, or maybe it's 10 feet tall, maybe it's 1 foot tall? How long does that exist?
Yeah, there's a lot of really smart people that have been skeptical of humanoids because, and I think that the thinking comes from we just were lazy and decided to copy a human, and like we weren't like ingenious enough to come up with a better design that is superhuman, and the human is not the perfect form factor. I think that is just misplaced because it's not just the world is built for humans. That is a huge advantage in having humanoids. But if I were to like just think about how would I design the ultimate general purpose robot from first principles without, like considering the human design. Okay, I need two legs, right? Because I need to be able to move around up and down different terrains. Like wheels wouldn't let me do that. I can't go up and down stairs with them. Okay, I need two arms and I need two hands because I need to move stuff around. Maybe I can have four hands, that'd be helpful, but maybe I really don't need it for most
Yeah.
situations, right? I need eyes to see the world around me, and they shouldn't be on my legs. They should probably be higher up so I have a better field of view.
Yeah.
And like you get to something that actually like looks something like a human. And look, like I don't believe it should look exactly like a human. And the companies that are building them, they're not designing them so dogmatically that it has to look exactly like a human. They're adding advantages. For example, the humanoids will have cameras on their wrists because that actually helps with model performance, is to have, these extra field of view. I think it's tough for humans to have that there because it's like we're using our hands everywhere and we can damage our eyeballs if they were on our
Yeah.
hands. And like that form factor like is so adaptable to different things. I need hands, I need legs, I need to be able to see, I need to be able to hear things, I need to be able to feel things as well, like a human should. Like we, I guess like whether you believe in evolution or not, if you do, then we evolved them for a reason, is because these characteristics of a human were really, really useful.
Yeah.
And so even if the world wasn't designed for a human, I think like the something like this would be pretty optimal. Like the way the humans look today, like Elon Musk and the people that are building these are not dumb people. Like and they're first principles thinkers as well. So I think the analogy I like to make is like look at the biggest products in the world. One, GPUs, and two, iPhones. What are they? They're general purpose devices. And it's like these people come with this mindset of like, no, a machine should be hyper optimized for one specific application. That is the best way to do it. And look, that is one way to do it, but it's not the best way to do it because you have to consider the fact that if something is general purpose, then you have the economies of scale. I can produce something that might cost $1 million at $10,000 just because I have the same process that is now easier to run. I can automate it more. I can reduce my costs.
Yeah.
And so an iPhone might have cost like a huge amount of money if you were just making a few copies of them because they're so useful for so many different applications. Everyone wants one and they can be made really cheaply, but it's still a huge business. And at the same time, look, what do they replace? They replace people's watches, they
Yeah.
replace your calendar, they replace your MP3 player, your GPS, so many different things. And you know why? It's because also these iPhones, these smartphones, they were platforms. They were platforms for development. That's what you should think about a humanoid or a
So I
general
like
purpose
that.
robot as, why the market is so big.
Yeah.
Look, it's not going to be just the robot companies developing the applications and the skills for the robot. People are going to be able to train their own skills and personalities in the way that these robots should work. You're going to open up this huge developer economy for robotics. That is going to be massive. And it's going to make them capable for so many different things. And that is, I think, really underappreciated. And there's going to be a lot of development because people maybe they don't want to design their own robot because that's really hard to do and figure out the manufacturer, whatever. I just want to do the training part of it, right? I want to develop a really cool application. And there's going to be demand, and there already is demand for these robots just from a research platform point of view or like a development platform point of view.
First of all, the world built for your take on world built for humans is so awesome. I love that take. Yeah, he would have a pretty good design. It is just like a pretty
Yeah.
solid design on the human body. Also, the second last point you mentioned, I'm curious, what do you think the economy around robotics is going to look like? It's like, okay, in the case of AI, I guess is a reasonable parallel example. There's been infinite venture money thrown at AI startups. The ones that have generated the most value are obviously, a lot of these labs. There's been infinite wrappers that I feel like oftentimes they kind of get vamped. Anthropic shipped some new update for Claude. Now or ChatGPT or OpenAI, they ship some new update. And it's questionable what a lot of these AI startups, like what moat they contain. And so when you think about robotics, it's like, okay, if you don't want to, be actually manufacturing and designing these humanoids, that's one thing. But where's the rest of the value in the ecosystem going to accrue? Like, how do you think about how that's laid out and what people are going to be working on?
Yeah, there's some value in proprietary data. For example, if I need to train my robot to do a task that is like maybe only a few people in the world know how to do or have some expertise in, And there's a moat in that there's only like, a few Gordon Ramsays or, like a few Roger Federers out there, and people are going to be willing to pay for, the best one as opposed to the third best one. But then at the same time, there's also this concept of good enough, where, look, I don't need an Einstein level model. I don't need Mythos for customer service work or data entry or for basic research or for a lot of software engineering, right? And that's what you're seeing happen in software engineering is now the kind of overtaking of open source models over, some of the frontier closed source models. And so that's why actually I think physical AI itself, the model layer, has less of a moat than Silicon Valley would believe. And so there's been starting to be like within the last 3 to 6 months, more excitement from the venture firms to invest in robotics and physical AI. And what they're thinking is like, look, OpenAI, Anthropic, huge companies capture a lot of value. That's the same equivalent is going to happen for robotics. I want to invest in the model layer. And I think that is the wrong approach. Maybe I'm wrong, by the way. Let's hedge myself here. But here's why I'm not betting as much. I think there will be value that accrue to these physical AI companies, but I don't think it's going to be as large as people think or in the same way as people think because of the commoditization of intelligence. And why do I think these models are going to be commoditized is because you look at what the Chinese AI labs are doing, right? Like they're just releasing everything open source. And some of the biggest companies in the US, NVIDIA, like open source is hugely important for them. They have really smart people and they're putting a lot of capital to work making their open source models better, right? Nemotron, their autonomous vehicle, was it research group, and then also for physical AI. I mean, they have like 5 different robotics AI research groups out there, and they're like pushing open source super hard. They're really talented. The gap between the frontier and open source, it was like 2 years to 6 months for LLMs, and for physical AI, I would characterize it as way less than that. Like, Dream Zero by NVIDIA when it released, I would say like it was like at the frontier. And so that gap is really small. And the gap is not going to matter once you get to the point that these models are good enough, right? Like, so if I'm doing a factory worker job or I'm doing a job at McDonald's, why do I need more of a gap if it does the job well enough? So that's why we're not investing heavily in model only companies. There's some really smart people at these companies, and some of these companies you're seeing that they were initially model only, they are now starting to try to build their own hardware.
Uh,
I think that's where a lot of the motive is in hardware and manufacturing. You have to have supply chain relationships. You got to understand which actuator company is reliable or not. It's going to hit your needs. If they get higher bids in the future, are they going to fill your orders or not? Is the stuff that they're giving you going to actually last for 5 years? Is it going to break after 6 months? If there's a shortage somewhere, like, can I get the materials I need to scale my operation? Do I have like the limited amount of people that understand how to do high scale, high rate manufacturing in America? Like all these things I would say are constraints that give you more of a moat on hardware. And another moat that you have in hardware is if I can deploy the robots, then I am the one that's collecting the data to make the robot better. And real robot data is really important. I think there's going to be one day, though, where you're just going to be able to train these robots in simulation and you don't need as much of the real world data as before, but that might be, I don't know, 5 years out where you maybe don't need real world data. I don't know, the world's moving so fast, so maybe 5 years too long, maybe 3 years. But in the meantime, hardware is going to have a moat. And what else what was I going to say? But when we get to the simulation part, that is really cool
explain
because
how that works.
it's like think about like Dragon Ball Z, right? Like what is that thing that they went to just like train the hyper time chamber
I'm thinking of Naruto's Shadow Clone Jutsu right now.
yeah, where it's a year of like real time is like a second in like that other world, right? Because I can have million simulations of not running, right? And training and trying to do something and learn. And you can actually use simulation right now for training, but only for primarily like locomotion, right? Like the robot walking around because the physics of that are more reliable to simulate.
God.
It just like the contact forces between the feet and the ground and within the robot itself. But when it comes to like the real world, there are so many things that are difficult to simulate in a way that is like accurate enough for training. So if I'm thinking about like water, like it's deformable, right? Or like, like so many things in the world are deformable. They can bend, right? The shape
Yeah.
can change. And so if I'm not modeling that perfectly, then the robot is not learning in the right way. So, that is a challenge, but I think it'll be solved and that'll really accelerate not just like robot learning, but imagine if you could simulate everything down to the atomic level. Like, well, then now I can just do medical development, drug development, and simulation as well, right? And instead of it taking 7 or 10 years for development, now it takes a month, right? Or like even
Yeah.
shorter than that because I can just simulate a human body, but that is really difficult. So it'll be cool when we
Simulation,
get
yeah.
there. Yeah.
You've done a bunch of pods, so we don't have to go super deep on the structure of RoboStrategy, but I do want to ask you one question about it. This is sort of a crypto parallel here, which is like maybe he's not the best name to use right now, but in a lot of ways, like Michael Saylor really pioneered this like close-end fund strategy. And the thing about strategy is that the underlying asset being Bitcoin is like not productive by nature.
Mhm.
And robotics and robots is like a very different underlying asset where the TAM for these companies and the products they produce is massive, and like the opportunity for them to generate revenue is extreme. And so I don't know, I'm curious like how you think about RoboStrategy versus like something that's come before it in strategy, and just like how big this, like I don't know what the future for it looks like.
Yeah. So I believe in learning from others and taking inspiration and not just copying things exactly, because I feel like that's what some people do and doesn't result in the best outcomes. But take the things that work really well, understand what made things maybe could be done better, and what things maybe you don't need or don't work as well, right? And for the case of MicroStrategy, it's leverage and preferred shares. We don't need that, our underlying assets. Like the TAM for robotics is so large and the industry is so small that why do I need leverage? To just kind of give you like how I think about how the industry is going to grow. The total market cap of all private robotics companies, kind of this new generation, is somewhere between maybe 100 billion to 200 billion. And like the total market cap of all Pokemon trading cards is 50 billion. So the industry as a whole can grow 100x, 1000x. And but what do they do really well was they mastered this concept of accretive issuance, which is basically saying, hey, look, the market values my portfolio for this amount, and maybe that's a premium to what I'm able to buy those assets for. And so it is actually accreting value, right? I'm crystallizing value for my shareholders by issuing equity to raise cash to then buy assets at a lower price than the market is valuing my assets for. And you can do that over and over and over. And people don't understand that loop is what drove the majority of value creation for MicroStrategy. So people think that MicroStrategy made a bunch of money from leverage in Bitcoin going up, but if you look at their average Bitcoin acquisition cost, it was 75K.
Yeah.
Bitcoin's a lot lower now. I don't know what their exact P&L is, but like, it's in maybe like above 3 billion by now, the net loss on Bitcoin. And so on a NAV per share basis, they've lost money buying Bitcoin. But their NAV per share in 2020 was around $2 to $4, depending on the accounting regime that you use. And the NAV per share now, netting out, the credit they have is close to, 100, 110, 120. And so it has still increased significantly, even with their loss on BTC and with BTC going down, right? Like they could lose even more money on Bitcoin, and the investors could still have retained a lot of earnings. But like the bull case, right, is if BTC goes up, now I have two engines that provide value for
Yes.
each share, which is the underlying and this NAV creation. And so people look at it, and some people are like, "This is voodoo magic. You're cheating. It's not real." They think it's like fake. But this concept is not something that is unfamiliar to public like equity markets. This is actually the same concept that private equity and other compounder companies have been using for decades.
Got it.
like TransDigm and Constellation Software, where, hey, look, the market prices them at 15 to 40x earnings, but for other software companies, maybe they're priced at 3 to 8x in the private markets. And so they can spend 100 million, buy a company, and then immediately the market adds 300 million of enterprise value to their stock because of the re-rating of the cash flows that they bought. And so this is like a not foreign concept, and it's been done. It's not also a cyclical thing because they've been able to do this for a very long time that we're just applying to venture capital. No one's done it before because I think the opportunity hasn't been as big, right? Like it's only recently that we've seen, okay, wow, companies have to go to $1 trillion before going public. But like now I think people are realizing we need access, and otherwise we're not going to be able to participate in this growth, which is the value proposition of what we're building at RoboStrategy.
What do you think are the long-term implications of that idea where companies will not go public until north of $1 trillion?
I think that's going to continue to happen unless regulation changes seriously. And, regulation is always a slow beast. And there's, maybe like counter pressures to do that as well from the people that are having an advantage, right? Like venture capitalists wouldn't want that to happen because it advantages them for companies to stay private longer and longer. And same with all of these other powerful funds and investors that are now getting into the game because, now software and wealth funds and growth funds and public equity funds even that are, crossing over into VC, like it's good for them if they stay private for longer because then they get it to themselves and they don't have to compete with everybody else. So I think that trend just keeps going on and it's going to get worse and worse because why does a company go public is because they've pretty much tapped out private markets. And so it just takes a significant amount of scale to do that. But if they keep winning in private markets, then there's going to be even more money in private markets to have these companies stay private longer and longer. The issue with going public and why these companies stay private is also because there's a huge burden to go public after 2008. There are all of these different reporting requirements. You, as a founder, might lose control of the company because of the government's, risk that you have as a public company that you don't have as a private company. And for these founders, the company is their baby. So, yeah, I don't think that dynamics is going to change. I think what you're going to see is more public venture capital funds. And so hopefully, like, we're going to provide a successful model and pioneer it and see a wave of these coming in the future. Although, for robotics, I would say we plan to dominate it and be the best one there.
I want to get your markets take on this, like your trader take on this, which is like sort of the impact, like the aftermath of crypto valuations and crypto success has had on the market. And like when I look at your history as an investor, it's like you've repeated this system but quite a few times where you come to an emerging market like DeFi. You did it, if I recall correctly, you did it with NFTs as well. You're doing it with robotics, where you sort of come into this emerging market, you apply like some very serious valuation, framework, thought process, whatever. And these markets are like really competitive and they're also uncertain. So there's a lot of delta to be captured in the uncertainty of these markets. And I don't know, you're early, you're right with a lot of conviction and you like shove. I was asking, even ChatGPT knows about the Azuki trade, right? And so how do you sort of find edge in these emerging markets? But then how do you think of the evolution of markets where they're very, at least seemingly like momentum driven, narrative driven, memetics driven, as we've seen with the aftermath of crypto?
I would say I'm not looking at robotics as like a narrative that I'm writing. I just believe this market and industry has a ton of room for growth and it's super interesting to learn about. And it's not really my goal to find trends. I mean, it's my goal to be a good investor. And I guess like if you're a good investor, you're sometimes at the beginning of trends. But sometimes like trends can last a while. And so maybe you can jump in the middle. That's fine with me. I think like what is like been helpful for me to be early to answer that question is to really look at things from a first principles approach. And I know that sounds sometimes like maybe like overstated, but just for robotics, for instance, people were just assuming that things wouldn't change and that the development would be the same as it was before, and that it would continue to be not a great investable field. And so, I think if like there's a major fact pattern that emerges, like a new piece of context emerges, you have to really evaluate and see like, hey, look, should my priors or like my understanding of the world change as well? And then go really, really deep in validating, your theses on like what the world might look like given new context. And I think what's also been really instrumental is just like having almost like an allergic reaction to something that doesn't make sense or something that is like the world believes, but I don't think maybe the general consensus is right about it. And just like going deeper and deeper until you feel like you find truth. Like my goal as an investor is to like be high conviction, find conviction, not be dogmatic, understand that you can be wrong, but like just be like, man, not satisfied until I feel like I really, really understand what's going on. And if I don't, I'm just gonna just have sleepless nights and just like this is gonna be the only thing I'm gonna obsess over to understand. And like that is what happened with like robot learning, because like that's a really complex topic. It's just like how do we train models to have the robots understand the world in the way that humans do? And that took a lot of time and talking to experts and talking to Claude and reading research papers and academic podcasts. But, eventually I got to a place where I felt like I got there. And, like now, and then also applying that for other areas as well. And then, you can't be an expert in everything. So you got to recruit other experts and partner with them to fill in that gap. But you got to be picky because it's hard to find other technical experts that maybe can also be non-dogmatic, because there are a lot of experts in the field that maybe they're really smart at something, but they're so dug into like a way of thinking it as well. And so they need to have like low ego. But yeah, and so like that also implies not just like understanding a topic, but also developing an investment framework, right? It's like I'm always thinking about like how can I refine my framework for understanding whether this is a good like robotics investment opportunity or not, because it's just like there are 1,000 factors and all of them are important to consider, but I can't have a perfect understanding of everything. And so like at what point is it maybe good enough for me to stop doing some research or stop asking questions? Like you build this model, it's like similar to LLMs, right? Like it's all about attention. Like what should I pay the most attention to, and developing that mechanism, and then developing like this mechanism also to, it's a very meta thing, to really understand your own understanding of a concept. Because a lot of people can maybe overestimate their understanding of a concept when in reality they might be missing a perspective and not appreciating it or enough, or maybe having a bias. And so like we're always trying to remove our biases and it's like, yeah, dig into truth, figure out the ways that we are wrong, battle test, an idea. This kind of goes back to simulation. You kind of have to like mentally simulate all the different things that could occur. Like, what if this is the right way to do robotics research? What if China, the Chinese industry like does this? What if there's a huge innovation in battery engineering or actuators, and how does that affect the market and the companies that I should invest in? So there's like so many different questions that you have to get a really good understanding of to have this perfect estimation of risk and reward as an investor. That's what everything comes back to, is risk and reward. But two different investors can have wildly different estimates of what the risk and reward of investment are. And so, your job as an investor should be like, how do I get as close to truth as possible so I can know that? And so like that's your edge as an investor. And so I rambled on for a bit, but going back to like robotics research, like investing in robotics in the first place, people thought the risk was really high, and it is for a majority of companies. But if you have a really great leader and team and everything else to make it possible, maybe it's not as high as you thought. And the reward as well, you have to think through it. For humanoids, it's multi-trillion-dollar, decatrillion-dollar TAM. And so even at a few $1 billion of valuation, maybe it makes sense to pay for a company that is relatively early stage because there's so much growth ahead of it. And that was the same case for Anthropic and OpenAI. They didn't have a product at some point, but they were trading at tens of billions of valuation. And yeah, so that's kind of how I think about maybe what's been helpful in being early.
That was a pretty beautiful full circle, I think, Andrew Kang. This has been, dude, this has been awesome, and I really appreciate your time. I want to give you a chance for sort of like a wrap question, which is like, I don't know, what can we expect? Like, what is coming? What are you excited about? Anything that you're working on? Like, what's sort of coming in the near future? What can people expect? And yeah, I hate wrap questions. So if there's anything you really wanted to add that I didn't ask as well, I wanted to just like give you a chance to do it.
Yeah, maybe I want to just reiterate what like our vision is for a fund, which is not only to create like the best robotics investment firm in the world, but to create the largest venture capital firm in the world, potentially. Something that is on the scale of something like SoftBank. SoftBank is essentially a closed-end fund if you think about it.
Yeah, that's a
They're
crazy
not
comp.
regulated as one, but they pretty much operate as one. It's just they're, for the most part, reinvesting, the capital on a very long time frame. And people don't really have the ability to redeem from their fund, right? It's permanent capital. There's no reason why there shouldn't be more companies like this out there. And when I think about MicroStrategy, right, like their TAM was Bitcoin. Bitcoin is less than 1.5 trillion now, and there's so many big tech companies that are more than that. The robotics TAM is bigger than that. So our TAM is order of magnitude bigger than MicroStrategy. And what is our selling point? I would say it's the same thing. MicroStrategy is access, but you can buy Bitcoin on an ETF, you can buy it on an exchange. You can't do that with, most of the investments that we're making because they're in the private markets and they depend on you having a relationship with the founder and also making the right decisions. And so that access issue, if we think that is the reason why MicroStrategy existed and why they were able to, issue tens of billions of dollars of equity at a premium, then that is, yeah, multiplied like 100x for us. So that's our bar, right? Like that is why I launched this thing is because I saw these companies that were kind of operating under this structure and I saw, okay, this model makes sense. It actually even makes more sense for this asset class. So let's run it. Yeah, let's cap that off there.
Let's run it. Andrew Kang, dude, it was an absolute pleasure. I'm a fan, man. I've enjoyed you for a while, so I'm happy we finally got to do it. I'm excited to watch the progression of RoboStrategy and everything that you're working on. Dude, it's cool to see you public face. Like, I love seeing you on podcasts. I love seeing clips of you on my TL. So we'll wrap it here, man. But thanks again for coming on.
Yeah, man. Appreciate it. Good coming on.
All right, brother. Peace.